Good afternoon, everyone, and welcome to today's webinar, Flexibility in Forgiveness, the New Form and its Easy Version. I'm Yonina Shineweather, CPA, the Consulting Director of Compliance at Viventium, and I'm happy to see all of you joining, and I'm excited that people were already asking questions and giving me a chance to answer some of your questions. Because when it comes to PPP and forgiveness, it seems like it never stops. And we've done many webinars together. I see many, I won't say new familiar faces, but familiar names joining. And each time there's something new that's happening, there's a new development, and the learning curve is steep, and there's stuff that we have to keep on mastering, new curveballs. This time, what I'm excited about, what I'm happy about, is that it's basically all good news. Almost everything we're going to talk about today is something that makes it easier for you to get forgiveness on more of your loan, meaning to get a larger grant out of the PPP program. And I'm really happy to be able to, help you work through this good news and see how to, just really leverage it as much as possible to keep your businesses going and strengthened, and hopefully back up to where they were and even better than before. So that's a very optimistic note to begin the webinar on. Just a couple of administrative points that I'd like to point out. This webinar is chock full of useful, practical information. As I was putting it together and just reviewing, and I was saying, I just can't wait to share this with everybody because there's so much here. And therefore, I want you to know it is being recorded. If you want to review the information, you will be getting a copy of the recording and also of the slides. I know that's always one of the #1 questions. Our team will be sending out to you a copy of the slides that we're going to be using. And I also want to encourage you to please do use your question toolbar option and keep those questions coming. I will try to work them into the presentation as we go along. And they, like I always say, and I've said this before for those of you who've been on webinars for me, but if I'm not explaining anything fully enough, or if you have questions about what I'm saying, then probably a lot of other of our listeners do as well. And you'll be doing everyone a favor by asking those questions using your toolbar and to, and bringing that to the forefront of everyone's attention. Now, I can tell you from some of the questions that I see now right at the beginning, I know that people want to talk about timing. Flexibility has given us 24 weeks instead of 8 weeks. When can we apply for forgiveness? How long do we have? How do all these provisions come together? And these are things that we're going to be talking about in today's webinar. So let's jump right in. And I said to myself before I get started, my head, before I got started even putting together the materials, I said, my head is just spinning from these developments. Let's just get it down straight. And if I'm getting dizzy from it, I'm sure other people are as well. So I put together a little timeline here just so we can, keep track of the biggest milestones in PPP. And after we go through them, I'm also going to show you a very nice infographic that you here today are the first ones to be seeing. It's going to come to you with the slides. It's a bonus preview as we had promised. But it's just very, very good roadmap for keeping track of where things are. Sometimes we're like, well, did they change this? Didn't they change this? So this all started, PPP all started back on March 27th when the president signed the CARES Act. CARES Act had a lot of stuff in it. It had the Social Security deferral in it. It had the employee retention credit in it. And it also had a special SBA program called the Paycheck Protection Program. That's where it all started. And people rushed to get their applications in, and around April 16th, the program ran out of funding. And then there was a hue and cry that, there were large publicly traded companies, and that was not the intention. And, so a few things happened. First of all, on April 24th, Congress passed the PPP Enhancement Act, allocating new funds, refunding the PPP. And then on April 27th, the SBA said, okay, now that we have money again, we are instructing our lenders to resume accepting applications. Remember that there was it said 10:30 in the morning on April 27th, they were going to reopen the application process. And then because of this protest against these large companies that seem to be, usurping funds, although they were not really doing anything illegal per se, because the law had been written to allow them to do it, but still this public protest, made SBA look more carefully and tighten up their regulations. And SBA had said that if someone had certified that their current economic certainty made the loan request necessary, and it was really not true, then they were going to come after them with all kinds of consequences. And so they said, but whoever will pay back their loan by May 7th, then we will consider that you had made your certification in good faith and we're going to leave you alone. They then later extended that deadline to May 14th. And then right in the middle of all of that, they released the forgiveness application. Now it's until May 15th that there was a lot of talk about what forgiveness would look like, but we didn't get to see it until May 15th. And that form that was released on May 15th is what we're going to refer to throughout this webinar as the old form. So whenever we say the old version of the form, we're referring to the one that was released on May 15th. And then the SBA gave another little extension of another 4 days to make sure more people who wanted to pay back their loans because they were nervous about their economic certainty certification, they could do it. So they had until May 18th. And then between May 18th and June 5th, we had a little bit of a lull. I mean, there was there was some rulemaking, and the SBA issued what was called an IFR, an interim final rule. I just love that term, interim final. Their next interim final rule was issued on June 1st. We still don't have a final rule. We're kind of waiting for that. There are still, as we'll talk about later in this webinar, many open questions, and also some actual outright, I would venture to say, errors on the form that SBA has issued, but we're waiting for that final rule, final clarification. That hasn't happened yet, but what did happen on June 5th, and that was a very welcome turn in this roadmap, is that the PPPFA was signed into law, and that increased flexibility. And so on June 17th, the SBA released a new forgiveness application. That's what we're going to call the new form, the form that reflects all the PPPFA changes. And that wasn't in existence when we did our last webinar. So that's what we're going to be taking a very up close and personal look at today, the new form. And we got two for the price of one. Not only did they release a new form on June 17th, but I think they surprised us all by releasing an easy form, kind of like a 1040 easy. In other words, if you don't have reductions basically in salary or in FTEs, then you don't have to go through that very painstaking documentation heavy process, and your banks won't have to go through that very painstaking documentation heavy process of going through all those pages, Schedule A worksheet. No, you'll be able to use a one-page easy form, and most employers will actually qualify for the easy form, and we're going to talk about why. So that's the history, and this is the infographic that I was telling you about. It basically contains the same information, just in a little more pictorial way, in a little way that's easier to identify with. And you'll be receiving a copy of this. And this is just to, I kind of need this to keep my head screwed on straight when I approach this. So hopefully it will be helpful to others as well. So now let's take a look at the old, the new, and the easy. And by the way, this table that we're studying is also, at the end of this webinar, I'm going to be giving you a beautiful, I really have to, to say that our team did a really beautiful job, if I may say so myself, of presenting this information in an infographic. And that'll be a bonus for you. That'll come along to you with the slides, after the webinar in the roundup email that you'll be getting. But this is really important. And what I'd like to be able to do with you is look side by side at the provisions. And then what we're going to do is we're actually going to pull out the law, the provisions as they're stated in the law. And we're going to see where on the forms these provisions are impacting and what it will mean to you when you fill out the form. And in here will also be the discussion that I know a number of you have been asking about in the questions. Which do I want to choose, the 8-week, the 24-week? When can I file? How much do I have? So we're going to be looking at all these questions. And let's go right into the provision. So the first provision that affects us in our PPP forgiveness process is How much is the minimum payroll portion of the forgiveness? Meaning, it's a little hard to say it in English, but basically, if you were applying for $100,000 worth of forgiveness, under the old form, before PPPFA, you would have to have had at least $75,000 of that used for payroll. And then only $25,000 could be used for non-payroll amounts. And again, in order to get forgiveness, you're limited as to what those non-payroll amounts could be. Only mortgage interest, rent, and utilities. Utilities, by the way, includes internet, includes phone service. The SBA did clarify that, which is good. That doesn't mean you can't use your PPP proceeds for other type of business expenses. You can. You just can't get forgiveness. It won't become a grant. It's just going to be a loan that you're going to have to pay back. Doesn't mean you've done anything wrong if you've used those monies for stuff other than payroll, rent, utilities, or interest. I want to be clear about that. But we're trying to see what can you do in order to maximize your grant. So you would have had under the new rules to, under the old rules to use up to at least $75,000 on payroll. You could have used $100,000 on payroll and gotten it forgiven, but at least $75,000 on payroll and not more than $25,000 on the other three. The new rules added flexibility to that. And it doesn't matter if you're filing the new long form or the easy form. Either way, you only have to use 60% of what you're requesting forgiveness of for payroll. So in our $100,000 example, where you were requesting forgiveness for $100,000, 60,000 was the minimum, was the threshold. 60,000, you could do 70,000, 80,000, 100,000 of payroll, but you had to do at least 60,000, and the remaining 40,000 could be used on the other big three. And again, if you use less than 60,000, you would still get forgiveness, but only on a smaller number. Your number would be adjusted down so that 60% of that number would be what you spent on payroll. And we'll see how that translates onto the form in a little while. Now, under the old system where you only had 8 weeks to spend your PPP proceeds, again, you had 8 weeks to spend it if you wanted forgiveness. You could have kept on using PPP proceeds after your 8-week covered period, and that would be fine, that would be legal, but those amounts would eventually have to be paid back within the terms of your loan to your lender. But if you wanted forgiveness, you had 8 weeks to use it, and within those 8 weeks, you could only count up to $15,385 of cash wage to employees, not talking about benefits, meaning you could also pay employer contributions to healthcare and to retirement plans, employer taxes, those types of non-cash benefits. In other words, money that the employee is not receiving in cash, that was not limited to $15,385. But the cash compensation was limited per employee to $15,385. Under the new way, and again, this is both, and I'll stress this because this can be a matter of confusion. Doesn't matter if you use the long form or the EZ, you still get the choice of using either an 8-week option or a 24-week option. If you use the 8-week option, the limit is the same, $15,385. If you use the 24-week option, it's increased proportionally. Where did that number, $46,154 per employee, come from? It's simply 24 weeks of $100,000 a year. Everything's based on $100,000 a year, just like when you did your loan application. But now, since we're using potentially a 24-week period, you would be able to count 24 50-seconds, 24 over 52 times 100,000, which is $46,154. Now, who can use this option? Well, as I said, you can use it whether you're filing the long form or the short form, but you can only elect the 8-week option now if your loan is before June 5th, meaning before the PPPFA. Anybody who's on our call who got their loan after June 5th does not have the option to use 8 weeks. You can only use 24 weeks. That's an important point there. Now, what if before your 24 weeks are up, you're ready to apply for forgiveness? Let's say you've used up the proceeds of your entire loan. You know, there's nothing more to request forgiveness for. You've paid it all out. There's no money left, and you'd like to apply for forgiveness. Do you have to wait till the end of the 24 weeks? No, you don't. That was clarified in the new form. You can apply for forgiveness early, and we're going to talk about that in a subsequent slide. I know that's been asked by some of the people on our webinar today. A similar change was made to owner-partner employees. Now, we don't yet know what the SBA means by owner-partner employees. That wasn't defined yet. Would a 2% shareholder of an S corporation be an owner, be a partner? Would they fall into this? Someone asked me, what about a corporate officer? Well, I guess it would depend if the officer is also an owner of shares in the company. We don't have any good definition yet of what the threshold for ownership is. If I own 1 share of stock in the company, does that make me an owner? We're waiting for guidance on that. But what we do know is that if you are an owner and you work for the company as well, you're held to a stricter standard. We have to limit the amount of your pay that we count toward forgiveness to either, under the old way, the smaller of that 15,385, or 8/52 of your 2019 compensation. And the reason that SBA did that is because what they didn't want to have happen was they didn't want owners to all of a sudden pay themselves, large payouts during the 8 weeks of the forgiveness period and say, okay, well, I've used my forgiveness for payroll, now just grant it back to me. So they've limited it to be up to par with your 2019 compensation. You can't, do any kind of abusive taking advantage of the program here. Now, what's new on the new form, and again, it would apply to the easy as well, is that if you're under the 8-week option, limit stays the same. If you're under the 24-week option, we're going to be using 2.5 months. We're going to look at 2.5 months of 100,000, which translates to 20,833 if you do it on a calculator. And we're also going to take the smaller of that, or the smaller of 2.5 divided by 12 months of your 2019 compensation. Now you'll ask me, why didn't they say something like 15 weeks instead of 2.5 months? I'm not sure. I know they're borrowing the 2.5 months from the idea that was on the loan application. Why they are tying the 8-week option to weeks and the 24-week option to months, I don't know. I don't know why they did that, but they did, and it's not a big deal on our part. It's just a matter of punching in different numbers on a calculator, or of course those of you who are with Viventium, on the Viventium report tool that you'll be getting. But that's the rule. So if you're using the 24-week option for owners and partners, the limit is the smaller of the 20,833 or the 2.5 months of 2019. Now, another provision of the PPPFA is that, remember we said if you had reductions to salaries or employees' rates that happened during that critical COVID, the pandemic real hot time, which was February 15th till April 26th of 2020, if your reductions happened during that time to the pay rates or the salaries, then as long as you brought the levels back up to what they were before February 15th, as long as you brought them back up by June 30th, that was called a safe harbor, you would not be penalized. And the same thing if you reduced employee FTE counts, the full-time equivalents, right? In other words, basically the hours employees worked. If you reduced them from February 15th to April 26th, and yet you managed to get them back up so that on your payroll of including June 30th, they were the same as your payroll including February 15th, you would not be penalized for those reductions. Well, that was at the time very optimistic on the part of Congress that everyone would be back up to regular operations by June 30. Current economic reality has taught us a thing or two, and so the PPPFA now reflects that unfortunate current economic reality, and it gives you until December 31st to bring your counts back up on the long form. On the easy form, this doesn't apply for the simple reason you can't use the easy form if you had a reduction that would cause your forgiveness to be slashed. You can, and we'll see who can use that easy form, but anyone who had a forgiveness slashing reduction is not on the easy at all. So this is only applying to those who are using the long form. What if you get your counts up before December 31st? Well, we'll see soon. That would be an ideal time to ask for forgiveness. Don't wait, because they might go down again. And the way the form is written, which is really great, and we'll see it soon, it allows you to send in your application even before December 31st rolls along. As soon as you are happy with your counts, as soon as you get them up to the level that they were on February 15th, you can go ahead and ask for forgiveness, which is really a great boon. It was unclear before if that was the case, but PPPFA and especially the new form make it clear. And the last provision on this table And this is very, very important to pay close attention to, because this is what's going to make almost every employer in the country eligible for forgiveness, and at least those who haven't reduced pay. There is this brand new safe harbor created by PPPFA, a giant safety net that says that if your FTE count, meaning the number of hours your employees are working, if it has decreased based on your look-back periods, and you can pick, again, the same 3 look-back periods that we had before. By the way, previous webinars are archived on our website, so if I'm referring to something in an earlier webinar, don't hesitate to go back and find it. If you have decreased your FTEs compared to your look-back period, but the reason that you decreased them was because you weren't able to operate at your pre-February 15th levels because of a government directive issued either by Health and Human Services, Center for Disease Control and Prevention, or OSHA, meaning any type of workplace safety, social distancing, any type of COVID-related directive. And that is keeping you from operating at your pre-February 15 level, then you will not be penalized. Your forgiveness will not be reduced for full-time equivalency decreases. Now that is great news, because that means you can use your PPP loan to keep your employees' pay levels up where they should be. But we had the problem that, well, no matter how much money I have, if people aren't coming back to work, they're not going to come back to work, and I'm going to be penalized because my FTEs are going down. So recognizing this, Congress said no. As long as you're keeping the pay up there, and we're giving you money to help you keep the pay up there, you will not be penalized for decreases in FTEs if it's because of a federal government directive. Now, if you'll notice, we have this in caps over here, federal government directive, not a state directive. So if you say, well, I can't operate because my state doesn't let my particular industry open up yet, or my particular business open up yet, unfortunately, that's not good enough. And that will not give you this safe harbor. It must be either a directive of the HHS, the CDC, or OSHA. What does this mean for those of you who want to file an EZ? Well, remember I just said a minute or 2 back that you can't file the EZ if you have an FTE reduction. Well, if you were listening carefully, what I was saying is you can't file the EZ if you have a forgiveness slashing FTE reduction, meaning if your FTE reductions are not excluded from slashing your forgiveness due to this safe harbor. Let me say that in a positive way. You can still use the EZ form, even if you've had an FTE reduction, if that reduction is due to HHS, CDC, or OSHA. You still can qualify, which is why I keep saying most employers are still going to qualify to use the EZ. You say, but I had to reduce my workforce even though I'm paying them. But it doesn't matter. If the reason you had to reduce your workforce was because of these government directives, you can still go ahead and use the EZ and make your life easy. Let's go on. FTE reduction exemptions. Remember before, on the earlier form, you got to put down a certain number of hours that were reduced, but that weren't going to be counted. You weren't going to be penalized for them. That was if you had fired someone for cause, or the employee had voluntarily terminated, or you had made a good faith written offer to restore the employee's position and they refused and you reported it to the state unemployment office. All of those things were called FTE reduction exemptions. They still apply. There were 2 of them. Either you made the offer or the employee was terminated for extenuating circumstances, meaning they requested it or for cause. There's now been a 3rd exemption included in that, which is good news, and that is you are unable to rehire those employees, and you're also unable to rehire similarly qualified employees. So the exemptions have been expanded. What we will see when we look at the form, unfortunately, is that the SBA did not really translate Congress's intention properly onto the form. We don't know if that's intentional, that they intended to change something, or unintentional as an oversight. We're hoping that further guidance will clarify that. I'm going to look at that with you in a little while. And none of these reduction exemptions apply to the EZ form because you're not on the EZ if you have FTE reduction. So it doesn't apply there. Then there are two important points of PPPFA that are not on the form at all, that don't flow through to the form, but I think it's important to mention. I know we've gotten a lot of client inquiries about this. Remember how we said that the employee retention credit that was also allowed by the CARES Act, where you could get up to 50% of the wages that you were paying to keep people on payroll as a credit, up to $10,000 of wages. Certain, okay, well, we had said that once you got PPP forgiveness, and this is not what we had said, this is what Congress had said, once you got forgiven on your PPP loan, you could no longer do the deferral, I'm sorry, not the ERC, this is the deferral, the Social Security deferral of employer taxes, right? Whatever employer Social Security would have to be deposited. We said once you got forgiveness, you could no longer defer your employer Social Security. Well, PPPFA changed that, and they said, no, you can defer your employer Social Security, half of it at the end of 2021 and half of it at the end of 2022, even after you have forgiveness. You still can't take the employee retention credit. I just want to clarify that because I misspoke. You can't take the employee retention credit once you get the PPP, but your employer tax deferral is going to be allowed even after you get forgiveness. That's great news. And those of you who have stopped deferring because you were anticipating forgiveness really didn't have to stop deferring. I know that some clients had stopped deferring as soon as they got the loan. That wasn't necessary. You would only have to stop deferring Social Security deposits once you got forgiveness on the loan. But now you won't even have to do that under both the EZ and the new form. Doesn't matter. You can continue deferring your employer Social Security even after your forgiveness on the loan. And then just the last point here, which again does not flow through to the form, but if there's any amount of loan that's not being forgiven, so for example, if you used your loan, like we said, for paying expenses that were not rent, utilities, or interest, if you used your loan for less than 60% of payroll, so that a certain amount is not going to be forgiven, doesn't matter, whatever the case may be, that amounts are not getting forgiven, or you had reductions that didn't fall under a safe harbor. So you, under the old rules, you had 2 years to repay it, and it stayed on the books at 1% interest. Under the new rules, doesn't matter which form you're using, the short or the long, you get 5 years. That's nice. So all of this was excellent news for employers. Now I want to focus in a little on what some of you are asking about, and that is, can you really submit the form early? And the answer is yes. As we'll soon see when we dive into the form, there is a line there that says, tell us what your counts are, meaning your salary, your FTE, tell us what your counts are as of December 31st or earlier date that you're submitting this application. So if you see, let's say sometime mid-August, that you have used up all your loan proceeds and you've used at least 60% of it for payroll and the rest of it for one of the 3 allowable expenses, and that you've now gotten your employees' pay levels back up to pre-February 15 levels. And not only that, but you've also gotten FTE levels up to February 15 levels, unless you're in that big safe harbor, in which case you don't even have to worry about your FTE levels, meaning the reason your levels are not up is because you can't operate at your pre-COVID level due to government directives, federal government directives. But if you see that those levels have returned, and I always put in a caveat, don't make any decisions without your CPA or your legal counsel, the best practice would be to submit the form right away. Don't wait. And the reason I'm saying don't wait is because a few reasons. We're going to see that when we talk about advantages of filing, when to file and what the advantages are. But I'll give you just a heads up. Don't wait because your count could fall again. And then you're going to get stuck. What if your count goes back down? Now, you can't say, well, I once had my count back up. Can you give me full forgiveness? No. If you don't have full forgiveness by December 30th, if you don't have full counts back up by December 31st, or by some earlier date that that may or may not come, you're not going to get full forgiveness. So grab it while you have it. If you see your numbers have come up even for one payroll, that's the time to have your forgiveness application ready. Now, of course, if you haven't used up your loan proceeds yet, then you don't want to file because then you're not maximizing your grant. But what I would tell all employers is as soon as you've used up your proceeds, have your application ready. and keep testing. Hopefully your payroll providers will be providing you with the tool. Those of you who are with Viventium will be able to run the report at any point and see. By the way, and this is, I do want to say this, I want to go on the record. I know people have been asking, when will the Viventium tool be ready? I'm going to go on the record to say that we're projected to release it by July 10th. We are hoping that by then the SBA will have released its final rule, and we're not only going to have to have something more solid than just an interim final rule. But in any case, whether or not they release their final rule, we are going to give you a tool that will be current as of the current guidance. And then once you have that tool, just keep using it. As soon as you have your loan proceeds used up on the right kind of things, 60% payroll, 40% everything else that's allowable, just keep running it and see when your levels have come back up. And as soon as they have, print out that application. And we're gonna, we're populating the fields for you. Just take the data and put it right down on your form and send it in. Catch it while it's good. That was the additional flexibility that they gave us now on the form. So it's time to start looking at the form. And what I want to do is actually go through the law itself, the language of the PPPFA. At the end of the webinar, you'll have a page of links, a slide containing all the links, and it will contain the link to the law as well. I want to step through the PPPFA and see where it goes on the form. Now, not always do the words of Congress find their way to the form. Sometimes they find their way to the instructions. And sometimes they're not, well, at least in one case, they weren't translated properly at all. We're going to see that as well, because I don't know what to do with that, but it's a question that I would suggest that you ask your tax advisors. And as a best practice, I would again suggest that you check with your payroll partner or your software vendor if they have already made the necessary modifications to accommodate this PPPFA, and if not, when will they be available? When will they be releasing a report that contains these modifications that give you the extra flexibility? Now, we're going to be going in the order of the way the statute was written, the PPPFA, so it's not in the order of the form. We're going to have to jump around the pages of the form because some of it appears earlier and some of it appears later. The first thing the law tells us is that forgiveness is amended to mean, and here you have A and B, either the earlier of the date that is 24 weeks after your disbursement date, when you received your first installment of the loan, or December 31st. What that means is if you get a loan late in the year, let's say in November, you can't extend your 24 weeks into 2021. You must end on December 31st. But for most of us on this webinar today who already have the loans, the December 31 is not really relevant, and you're going to be looking at 24 weeks after your loan. And as we said, for those who took their loans before June 5th, you also have the option of still using the 8 weeks. So where is this? It's not on the form at all. You won't find 24 weeks stated anywhere on the form, but you will find it here in the instructions. And what we're looking at now is, and you'll have a link to this at the end of the webinar, the loan forgiveness application instructions revised June 16th. Okay. The reason, by the way, these links are important that I'll be including at the end is that SBA does not yet have them so readily available. You kind of have to hunt. When it originally issued the form on May 15th, it had it very nicely. It had the form and the instructions interspersed. Those of you who have looked at the June 16th form, it's only the form. They don't have the instructions there, and the instructions are a little hard to hunt down. So we're providing you with the links at the end of the webinar. But here it is. We follow the arrow. The definition of covered period, it's either one, the 24-week, which means 168-day period, beginning on your disbursement date, or two, if you got your loan before June 5th, you may elect to use the 8 weeks. That's where it is. And the same thing is for the alternative payroll cover period, which just coordinates it with your payroll dates. Okay, so that's the first provision, and we see it here in the instructions. Again, you want to make sure that whatever, if you're using off-the-shelf software or proprietary in-house developed software, or you're using a third-party vendor, make sure that they're able to give you both options. And don't wait until you're ready for forgiveness to ask these questions. I would suggest that you contact your providers, your partners already, and just ask if they're accommodating the new flexibility that was allowed under PPPFA. The second provision in the law is again, forgiveness is now defined as if you bring your levels up by striking June 30th, each place it appears, and inserting December 31st. So this is actually on the form. It's on the worksheet, the Schedule A worksheet. Here it is. Down in step 4, enter your total full-time equivalents as of the earlier of December 31st and the date this application is submitted. Now those 7 words and the date this application is submitted looks like something very innocent, very small, very meaningless. It's just buried there. But this is great, good news for all of us, and it's what we discussed earlier. And this was not there on the earlier form, on the old form. What this is saying is that you can send in this application whenever you want, whenever you are ready, and you can use your FTEs as of that date, which is what I said earlier. If you get your counts up, your pay counts, your FTE counts, if you're back up where you should be by December, by any date, file then, submit then, grab the opportunity. And this is where you're allowed to do it. This says you don't have to wait till December 31st. So this is very exciting. I wish SBA would have, underscored that more and but that's what we're here for, to help you interpret and understand what's going on. This should be like in big neon flashing lights. You can use the date that's best for you. The next impact, and this is, again, we're continuing section 3 of the law, but we add the following new paragraphs. Exemption based on employee availability. Now, I'm going to ask you to put on your, legal caps here, because we're reading legalese. And this is a question that I don't have an answer for. That's what I mentioned before. SBA is changing something in what Congress says, which, it has been done before, but here they seem to be changing it to the detriment of the employee, of the employer, which I think is a mistake. I really don't think this was SBA's intention. But again, I'm not an attorney, but I would greatly encourage you to to seek advice about this. So let's take a look. The law says that from February 15th to December 31st, your loan forgiveness will not be reduced. In other words, it will be determined without regard to a reduction in the number of your FTEs if, in good faith, you're able to document that you couldn't rehire your pre-February 15th employees and you couldn't hire similarly qualified employees. What does the application say? Well, it's again here in the instructions. It's in the instructions under the FTE reduction exceptions. These are instructions to the worksheet, to the Schedule A worksheet. And there seems to be some break here, because what the instructions say is any position for which you, the employer, made a good faith written offer to rehire an individual and you were unable to hire similarly qualified employees is not counted. Again, the instructions say if you try to rehire them or you couldn't rehire similarly qualified. That doesn't make too much sense to me, and it's also not what Congress says. I think what they did is I think they simply copied number 2, which was the old one. Any position for which the borrower made a good faith written offer. See the exact same words. I think they did cut and paste. And with all due respect to SBA, I do hope that they will clarify if this is really what they intended, because it's certainly not what Congress wrote. Congress wrote, if you couldn't rehire individuals and you couldn't rehire similarly qualified, then we don't penalize you for the reduction. Okay, not that you made a written offer to rehire. That's safe harbor over here. That's number 2. That was not what the PPPFA said. So I don't know what to tell you here. Again, I can't tell you whether you should be following these instructions, whether you should be following the language of Congress. That's a question that I'm going to leave for you to discuss with your tax advisor, and perhaps even with your lender. That might be something you would want to consider taking up with your bank. And telling them, the instructions say X and the, law says Y, and we don't know what to do. Are we allowed to, if we couldn't rehire anybody, are we allowed, do we have to make them an offer? But we can't make them an offer, and we can't make a good faith offer that we can't do. That's not good faith. What should we do? I don't know. The next provision is this federal directive. That big, this is really the best news, this big safety net. And it says, we're adding at the following of the new paragraph, exemption based on employee availability. During the period between February 15th, December 31st, etc., forgiveness shall be determined without regard to a reduction if, in good faith, you are able to document an inability to return to the same level of business activity as you had before February 15th due to compliance with HHS, CDC, or OSHA. And it has to be a directive that was issued from March 1st till December 31st. Where do we see that? That is right here on the form itself on Schedule A, and it's now called Safe Harbor 1. On the old form, there was only one choice here. Now you have Safe Harbor 1 and Safe Harbor 2. Okay, Safe Harbor 1 says exactly what it should say. If you are unable to operate between February 15th and the end of the covered period at the same level as before because of HHS, CDC, or OSHA, then you will not have any penalty for reducing your employee count. That's great news, really great news. There are effects of PPFA on the form that are not stated anywhere in the law. Meaning Congress didn't write, well, the cap is now $46,154. Congress did not consider that part of its duty. They left that to SBA to actually translate their words, and SBA did. So even though these are not words in the law itself, we do see the cap is reflected here in the instructions again. And here it makes it clear that for an 8-week period, the total is $15,385. Again, that's 8/52 of 100,000. And they added a sentence for a 24-week covered period. The total is $46,154. Again, please check with your providers. Those of you who are with the Vivent team don't have to check because we're on board with this, but you want to be checking with your payroll partners that their reports are now going to reflect the revised $46,154 cap of cash compensation. And one last implication, the one we discussed before about owners, whoever they may be, and that's reflected here again in the instructions, that any amounts paid to owners or general partners or a self-employed individual is capped at the lesser of $28,33 or 2.5 of 2019, 2.5 months of 2019, and then 8 weeks is $15,385 or 8 weeks of 2019. Again, why the parallel, why the, why we're using months here and weeks here, I don't know, doesn't really matter, but that's the way the instructions are written, so that's what we're gonna do. And there you have it. Those are the manifestations of PPP on the form. Now let's talk about the easy. So first of all, we have a little link right here that if you click on it, will bring you to a very nice test who can use the EZ. And you look at this and it looks a little bit, a little bit foreboding. So much words, so many, regulations here. So this is who can use the EZ. But to make it a little easier, I've kind of summarized it here in English. There are 3 categories of borrowers who can use the EZ. First one are self-employed individuals or independent contractors or sole proprietors who have no employees. Well, presumably that's not who's on the call now, because presumably you're here because you're an employer and you want to talk about payroll. But if you don't have any employees, you fall into the self-employed category, that would be an easy case. Very simple. We're going to look at the easy soon as well to see just how easy it is. Now, what about employers? So 2 groups of employers can use the easy. First one, if you didn't reduce any single employee's salary by more than 25%, or at least those employees who did not get paid more than $100,000 in 2019. If you'll remember, those of you who were with us for an earlier Viventium webinar about the form, where we dived into the form, we discussed that for those employees who were paid more than $100,000 in 2019, SBA is not trying to protect them, and frankly, you can reduce their salary by more than 25% without getting penalized. It's only those who earned less than $100,000 that SBA is interested in protecting, and for those employees, you are penalized if you reduce their salary by more than 25%. So if those employees, those protected group of employees, the under 100,000ers in 2019, if they were not reduced by more than 25%, and you didn't reduce your employee or your paid hour count from the beginning of the year till the end of your covered period, unless you couldn't rehire them or they refused your rehire offer, then you can use the easy form. Okay, so let's say that again, because that was a lot of unlesses and ifs. You can use the easy form if you didn't reduce employee salary more than the allowable amount, and you didn't reduce your head count, unless The reason you did reduce your head count, but it was because that you tried and they refused, or you just couldn't rehire them or replace them. So if any of those apply, you can use the easy. You didn't reduce salary and you didn't reduce head count. And then the last group of employers who can use the easy are, you didn't reduce salary, just like before, and you did reduce head count, but the reason you reduced head count was because of those federal directives, again, HHS, CDC, or OSHA. So even if you reduced your employee count or your paid hour count, you're still not going to be barred from using the EZ. And the truth is, we saw this up above when we did the chart about who could use the EZ. You will be allowed to use the EZ even if you reduced your head count, if the reason was because of a government directive issued between March 1st and December 31st. So again, so it's those who didn't reduce salary and didn't reduce head count can use the EZ, or those who didn't reduce salary and did reduce head count, but only because they couldn't work because of government directives at the same level. So that means most people, right? Most people who didn't do large salary cuts, and with a PPP loan, hopefully you didn't have to do large salary cuts. You could, and if you're not operating at the same level because of COVID, because of the government, what they're restricting you because of COVID, then you can go ahead and use the easy. So here it is. Let's meet the easy. Again, I want to stress, just so we're clear, I know this can be a point of confusion. You can use the 8-week or the 24-week option under the easy as well. That's not constrained by the easy. Doesn't matter. You can use the long form, you can use the easy form, whichever form you're going to use, you can choose the 8 weeks or the 24 weeks, assuming your loan is before June 5th. There's no Schedule A. There's no Schedule A worksheet. It's a one-page form. This is it. I mean, there's a page of certifications later that you have to certify that but this is let's take a look at it. So you put in all the same information at the top, your loan number, your lender number, your loan amount, the date that you got your first installment, the same two absolutely meaningless lines, employees at the time of your loan application, employees at the time of forgiveness. That doesn't mean FTEs, it's just some vague, nebulous employee number. We don't know why they're asking this, maybe for statistical purposes, I don't know. Your EIDL advance amount. Some people ask me, does the forgiveness include the EIDL? So of course, any advance is going to be subtracted, EIDL number. And then what your payroll schedule is, your covered period. Here's again where you pick either the 8 weeks or the 24 weeks, and that would start from your loan disbursement date. Or, as we said in an earlier webinar, you can start from the first period begin after your loan disbursement date, just to make it easier to count payroll so you don't have to go prorating stuff. But you can only do that if you're weekly or bi-weekly. It doesn't work if you're monthly or semi-monthly, then you have to use the covered period. If your loan is in excess of 2 million, check here. That's when your certifications will be examined more carefully. And then we get down to the meat of the form, the forgiveness amount calculation. And we get to line 1, payroll costs. And on the old form, on the long form, it said, take the amount from Schedule A, and that took the amount from the Schedule A worksheet. Here it's very simple. You don't need any Schedule A. You don't have to put down employee by employee numbers. No, just give one aggregate total payroll costs. You do need still to be capping cash compensation for employees at either the 15,385 or the 46,154. That has to be built into this number, but they're not asking for detail. Of course, you'll have to maintain detail in case of audit, but they're not asking for it on the form. Just put down your payroll costs. And the reason we don't need the schedules and the worksheets is because there's no reductions here. You're only here on this form if you didn't reduce salaries, or at least you didn't reduce it by any amount that counts, more than 25%, and you didn't reduce FTEs in a way that's going to cause you to have forgiveness reduction. The easy is a form for people who do not have forgiveness reduction. Simple, plain and simple. So you just put down your payroll costs, and then your other 3 costs, if at all, mortgage, interest, rent, utility. You don't have to put these numbers down. If you don't want to claim them, you don't have to. Keep in mind, as we've said earlier, any amounts claimed for forgiveness, any amounts forgiven, will not be able to be used as corporate business deductions on your corporate return. So if it's in your interest to be able to deduct your mortgage interest on your corporate return, don't apply for forgiveness for it. So you don't have to do lines 2, 3, and 4 if you don't want to. But when you're done, add up all the amounts. Here, there used to be on the old form a minus if there was any salary reduction, but since there's no salary reduction, at least no excess salary reduction, which we call loan forgiveness slashing. So there's no reduction here. So there's nothing subtracted. You just add lines 1 through 4. Then you just have to take the lower of that, which is what you used, or your PPP loan amount itself from up above, because you can't, obviously, you can't get forgiven more than your loan amount, or the gross up, the 60% requirement, meaning you have to take your payroll costs, line 1, divide it by 60% to make sure that the amount that you're asking for is at least 60% payroll. And if it's not, it's going to reduce your forgiveness amount. And then the bottom line, line 8, your forgiveness amount is simply the smaller of those 3 amounts: your disbursements, your actual loan, or your 60% gross up. And note, it's the 60% gross up, not the 75% gross up, because this is the new form. And that's it. That's the whole entire form. That's the easy. So now let's talk about what are some advantages of the 8-week option and what are some advantages of the 24-week option. First of all, the 8-week option is only available, and we've said this consistently throughout the webinar, it's only available if you got your loan before June 5th. That was the date of the PPPFA. The advantage of the 8-week option is if you have already brought your pay counts back up and you've already brought your FTE counts back up to pre-COVID levels, then don't wait. Like I said before, don't risk further drops. If you wait 24 weeks, then in theory, your levels could drop again. If you're ready now, you had your forms all ready to go for it. Submit your form. Another reason to go for the 8-week option. Right now, we know what the rules are. I mean, we have open questions, but these are the rules that we're dealing with right now, and you can make a good faith interpretation and apply under them, or you can reach out to your lender for clarification. What's known is known. In the future, there will eventually be a final rule. We're not going to be left with an interim final rule forever, I assume. There will be final rules. We don't know what's going to happen. Maybe something less favorable. Maybe the economy will take an upturn, which would be good news, but maybe the SBA rules will be made stricter. We don't know. So if you qualify for full forgiveness, to your best estimation, under the current rules, don't wait, because we don't know what's going to happen. Also, avoid the rush. You know, when people wait at the end of the 24-week periods, as we get later and later into the year, more and more employers and borrowers are going to be submitting their applications. There will be a rush. SBA is, right now, there's plenty of funding still in the loan program, but SBA is going to someday have to pay all this money back to your bank, the money that your bank lent you. When the whole thing, you know, and everything's reconciled, SBA is going to reimburse the bank. We want to ensure that your lender is going to get its funding. We want you to avoid the rush. We have seen this program run out of money before, and these are uncertain times. So, you know, I'm in favor. If you are able to apply now and get forgiveness, go for it. Why wait? Similarly, if you are considering taking a different loan from any other source or opening up a line of credit, well, your lender, your potential new credit lender, will have more information to base your line of credit on once your PPP forgiveness amounts are determined. In other words, if you can get an early forgiveness decision, then you'll be able to say, well, look, here, I don't have this. This is not really a loan. Or even if you've just submitted the application, but you can show why you believe that your loan will be forgiven, and this is the application I've submitted, that should be good food for thought for any other lender to say, yeah, okay, we're not going to consider that you have an open loan because we see that you've submitted your forgiveness application and it looks good. So, you know, we will be more generous in your opening up a large line of credit. And I want to conclude this analysis by saying, do not rely on anything that you hear during this webinar as actual advice for making decisions, as an actual legal opinion or a CPA opinion. Consult your own CPA or your legal counsel. Viventium is not engaged in the practice of rendering business advice or legal opinions. What about the other side of the coin, the 24-week option? Well, first of all, those of you, if there are any of you on today's webinar who have gotten a loan after June 5th, you really don't have a choice. This is the only option that you have. If your workers haven't come back to work yet, so you have two choices. If you take the 8-week option, you want to use up your funds, basically you become the local unemployment office. You pay them the funds even though they're not working, but that's not really going to help your business too much when they come back to work. Then you've used up your funds. But if you use the 24-week option, you'll be able to wait. You don't have to pay them now. You'll be able to wait to use the loan to pay for actual work performed. And that means once they come back to work, that's when you'll be using these monies for what they're meant to be used for, which is keeping your business going and actually paying employees for work they do. And that's the reason the whole 24-week option was brought up to begin with. Exactly. If you were not able to use all of your loan proceeds during the 8-week period, so electing the 24-week period will certainly maximize your grant. Also, there is an advantage to waiting because, as I said, there are still many things that are not clear. Waiting will allow the SBA, hopefully, to issue clear guidance and remove uncertainties. And similarly, and I think this is, for me, this is one of the biggest arguments for waiting for the 24 weeks, you're not burning any bridges. Once you have your 24-week data in, you can look at a 24-week scenario. Again, you want to make sure your provider is able to do this. Those of you who are with Viventium, you'll be given an option on the tool of selecting the 8-week or the 24-week period, and you can compare them side by side. Here's my 24-week data. This is what it would look like. Here's my 8-week data. I'll choose the most favorable one for me. So you don't lose anything unless you need to take that loan or line of credit that we mentioned before, but you don't really lose anything by waiting for the 24-week option. And of course, always consult your CPA about this. What questions are we left with? Well, I see people have quite a significant amount of questions, and if only time permits, I'll try to address some of them in the webinar, but I'll tell you some of my own questions. First of all, and these are questions that we don't really have an answer yet. We're hopeful that SBA will be providing those answers. But let's say you go with the 8-week application, you send it in, and they find some problem and you can't get full forgiveness. Can you then resubmit using the 24-week option, or is it like a one-time deal? We don't know. If a borrower elects the 8-week period, you decide you're going to use 8 weeks. Can you still use December 31st for restoring your levels, or do you have to stick with the June 30th? Because that was what was originally tied to 8 weeks. Again, that's not clear. We don't know. And the same question about the safe harbor. If I elect the 8 weeks, can I use the new PPPFA big net that I'm unable to rehire or hire similar till December 31st, or not? Because that's a PPP thing, so a PPPFA thing, I should say. So if I'm using the 8 weeks, do I still have a deadline to rehire till December 31st, or do I have to stick with June 30th? Now, if you noticed, when we spoke about who could use the EZ, I said that anyone who did not decrease their number of employees or their average paid hours of employees. That's not exactly full-time equivalence, different terminology here. It's not clear if that's the criteria to use for EZ, that you didn't decrease FTEs, or there's something else going on here when they say didn't decrease the number of employees or average paid hours. Hopefully SBA will clarify that. If not, again, if we don't get clarification on this, your best course is to turn to your lender or to your bank and to ask them. We may see what we saw under the loan application, which was that different lenders had different standards. And even though SBA said, guidelines, but different banks were applying sometimes even stricter guidelines in the loan application. And I'm afraid we may be facing the same thing when it comes to loan forgiveness. And each lender may have its own interpretation or additional safeguards that it's placing around itself. So it's important to run these questions by your lenders. The next question is the one that I showed you on the form before, and that was that the law allows the forgiveness reduction when employers can document an inability to rehire pre-COVID employees. But on the form, they don't state it that way. They say that it's from positions that you made a good faith written offer to rehire a pre-COVID employee. Is it a mistake or is it intentional? Don't know that. And of course, we mentioned many times that there's lots of IFRs out there. They've issued a few interim final rules, but when will the final rule be issued, and will it have any surprises? Remains to be seen. I want to finish up as we're getting toward the end with a very colorful ending. What you'll have here, and again, this is going to be coming to you in your slides. This is the infographic that those of you who were on our previous webinar about PPPFA had seen, the one on the left-hand side. However, the new infographic, which is a lot emptier, and you get to that finish line a lot more simply, incorporates the EZ journey. You'll be able to take a look at that just as a review of everything we've discussed. This is also the infographic that I had mentioned before about the charts that we went through, the provision, the old, the new, and the EZs. This is a summary of what we saw before. And as I had also mentioned, unfortunately, SBA has kind of scattered, for some reason, its links all over the web. And what we've done for you here is kind of concentrated them in one place. So you have the form and the instructions to the long form, the EZ, the instructions to the EZ, and the text of the PPPFA itself. The text of the actual law is not yet uploaded on congress.gov, but the text of the bill is there, and the language of the bill was not changed. And I just want to mention, those of you who are our clients, of course, are familiar with the VCUC, the Vincent Coronavirus Update Center. And those of you who are not clients may, well, I don't consider becoming clients, but I just want to mention that it's there. It gives you, a great clickable resource to get the most recent updates, and you should be visiting this at least once a week. It also informs you of upcoming events and webinars that you may find helpful. Now, I know that you don't usually attend a webinar to find out what we don't know. But the reason I gave you that whole long list of questions is because, first of all, some of those questions correspond to some questions that you've been asking. So you should know that we're together in this and not having the answers yet. And similarly, when it comes to PPP, it's very important to know if you have a question because you don't understand and the answer can be obtained, or you have a question because you don't understand and no one can understand yet. So the little slide of questions that we looked at before, you can just compare them to your own questions. And these are all questions that we don't have an answer for yet. The questions that you have addressed during the webinar, we will be sending out a summary of those questions, or at least a high-level summary of some of those questions and the ones that are being asked most commonly, and some answers. The follow-up to this webinar that you'll get first is going to be the slides, the recording, and these infographics. And then, a couple days hence, you'll also be getting a high-level treatment, because I know that, some of you have been very, very copious in asking the questions, and I do appreciate that. It is helpful. And so we'll be sending out a high-level summary of those questions and answers as well. And of course, those of you who are clients, please feel free to reach out to your client services team with any questions that you may have. As always, we at Viventium are here in it with you, seeing you through to forgiveness in the best way possible. I want to thank you all for participating today and attending, and to wish you all much success on your journey to PPP forgiveness. Thank you.